Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's get more on UMich, my favorite indicator. Joanne Hsu is University of Michigan Surveys of Consumer Director, breaking down these numbers for us. Joanne, it feels like it's a non-mover, really. Like everything is status quo. Can you walk me through what you see in these numbers?
Absolutely. So overall, it is essentially flat from last month. However, that does obscure some pretty substantial movements within the population. First of all, election news has been really dominating the headlines, and we see that in our data. Sentiment for Democrats improved 6% this month, but this ended up being offset by a 5% decline for Republicans. And these movements were entirely in expectations, which is sensible given that election developments, Kamala Harris becoming the new nominee for the Democrats, is not something that affects current assessments, but is something that affects people's outlook for the future.
And how can we expect that to evolve as we get closer to the election, since we are still only in mid-August?
It's going to be volatile, or that's what I would expect. So far, consumers are really folding in who they think is going to win the election. But of course, as the campaign season evolves, people's expectations for the election are going to change. And as such, their future expectations for the macroeconomy will as well.
What are some of the other things that you noticed, just in terms of either future expectations or current conditions, I should say, which did improve?
Yeah, current conditions really didn't move much at all. And if anything, it edged down just a little bit. Consumers continue to be very frustrated by high prices. That continues to be top of mind. At the same time, consumers do expect inflation to continue stabilizing. They weren't really reacting to a CPI print or any data that came out this month. They were really already folding in their experiences throughout the month, their own experiences shopping and seeing the prices around them.
And just looking at the report, so we see 35% of respondents expect unemployment rate to rise in the coming year. Growing number expect interest rates to pull back. How does that kind of impact consumer sentiment and kind of where we could be in the coming months?
So consumers aren't really that concerned right now that labor markets may be softening. So the 35% expecting unemployment rates to go up, that's unchanged from last month. So that's pretty stable. Income expectations have edged up, improved just a little bit, or have gone sideways. There's no weakening in consumer views of labor markets in August. That being said, strength in labor markets is precisely what has supported robust consumer spending over the last 2 years, in spite of the fact that consumers don't feel like they're thriving. And so if there is some unraveling in labor markets, some softening in labor markets, I would expect consumers to pull back.
All right, Joanne.
That being, yeah.
Oh, no, finish up. Sorry.
Yeah, and part of the reason why that consumers, I think, feel some confidence about labor markets is that they do expect interest rates to come down in the year ahead.
Which leads us right back to the Fed. Hey, Joanne, we do appreciate it. Thank you very much, Joanne Hsu, University of Michigan Surveys of Consumer Director, joining us on those numbers as sentiment came in a touch better, current conditions a touch lower, and expectations a touch higher as well.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, let's get a professional in here now and talk about how you think about these markets after the volatility that we've seen in the last couple of weeks. But if you went on vacation 2 weeks ago and came back now, you didn't really miss much at the end of the day, which is also kind of crazy. Shana Sissel joins us. She's president and CEO of Banríon Capital Management, and she joins us now. Shana, isn't that funny? 2 weeks ago, it's like it never happened. I mean, that kind of rebound in the S&P is quite striking. How does that set you up now for the next couple months?
I always say the best thing we can do for clients sometimes is maybe take away their password to their brokerage accounts so they're not checking it every day, because if they didn't, they would sleep a lot better at night for that exact reason. The market has short memory these days because we have so much information out there in the 24-hour news cycle. But I think the volatility, Professor Siegel was on another network earlier this week, taking back everything he said when the panic set in. And if the professionals that investors look to for guidance are inclined to panic. I think that says a lot about kind of the overall sentiment and psychology of the market right now. So it doesn't surprise me that, as information became available, people stopped freaking out about the yen carry trade. But it doesn't change the fact that we are in a slowing economy. We've had good data, and so I think people feel confident the Fed is definitely going to cut 25 basis points in September. And I think that if you are a long-term investor, that there's some opportunities when people freak out like that to take advantage of the psychology of the market and buy things at a discount.
Shana, Jackson Hole next week. What are you looking for from Jay Powell? What can he say that can either reinforce the view that we're going to get a 25, if not a 50 basis point cut, or could he even kind of throw a wrench into things and maybe push that further out again?
I can't imagine where he's going to throw a wrench in things. I do think that 50 basis points is a stretch. There's not enough data that suggests that we need to do a larger than expected cut. And I think the Fed is cautious to not do something so abrupt and significant that it would upset the overall market sentiment, as I've noted a couple of times, does matter. And I expect that he will continue the same narrative that he's had for quite some time, which is that the economy is stable. It's doing okay. The data shows that it's slowing down and softening, but not of concern. And it supports a 25 basis point cut. And I think that's what he'll continue to say. I've watched him long enough now to know that he's not one to very quickly change his tone. And the last time he was out speaking, he was, not necessarily overly dovish. And I don't expect him to suddenly become overly dovish.
Which, to be fair, most other Fed presidents aren't either. So there's that as well. So we're kind of wrapping up the earnings season. We got some retail that's trickling out. Obviously, NVIDIA is going to be a big event at the end of August. But what stocks do you like after we're kind of past the real hump of earnings season, headed into an election cycle where policy will be very unclear?
Yeah, so I have kind of a wide variety of different types of stocks that I like. I like a name like Atlas Holdings, which is a commercial insurance firm. I followed it for a while since my days at Ariel, and it's a really interesting company with a really unique niche that is trading at a discount and has some relatively attractive upside. Pretty boring. It's in financials, so people. It's not sexy like NVIDIA or any of the AI plays. VRT is an AI play, but it's a second derivative of traditional AI. It's data center cooling, which is really important because in this growing AI demand and more people looking to incorporate it, you need greater computing power, and thus you need a lot stronger or a lot more powerful cooling systems, of which VRT can bring to the table. I also like Novartis, which is a healthcare company, so I'm a little all over the place. I'm happy to go down any one of those roads for you. But I am trying to find ideas outside of what has been the hot trend, because you want to get into other areas when you start to see dispersion of returns, which we have seen a little bit of. And you want to take advantage of opportunities to be a stock picker.
So, yeah, I guess kind of when you look at how you're playing AI, you mentioned Vertiv. I covered them when they went public through a SPAC. So you're looking at kind of these derivative plays when you're thinking about implementation of artificial intelligence and who can be the winners or losers?
Yeah, that's exactly what I'm doing. I'm someone who's followed and loved NVIDIA and been talking about NVIDIA now for years. And it has served me well. I've made a lot of money for clients and in that stock. And I'm still very much bullish on the stock. I think the trends are very favorable for the long term, and we're still very early in the AI cycle. That said, I don't think it can maintain the growth rate that it's had going forward. Now, 100% growth is still really impressive, but when you were at 300% growth, it feels a little disappointing. And so I'm trying to find other ideas that will benefit from AI Vertiv is one of them. I've talked a little bit about Cisco in the past, and I know they're all in the news with the announcement of their layoffs. But that's another player that has some second derivative exposure in AI as well, and trading very cheaply, and obviously making some unattractive or unpopular decisions internally. But typically those decisions are made to improve overall financial performance. So that's another name, but it's not on my buy list. But it isn't another like second derivative play. Yeah. And that's kind of what you have to look at this point.
Hey, Shana, really appreciate it. That's such a great point about Cisco. Shana Sissel joining us. She's president and CEO of Banríon Capital Management, joining us there.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I'm Alix alongside Bailey Lipschultz. Paul Sweeney is sunning himself at the beach today. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance and economics through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries all around the world. One topic we wanted to tackle today was Mpox. So the WHO declared a fast-spreading Mpox outbreak in Africa a global health emergency as the agency seeks to contain the spread of the potentially deadly virus. WHO Director General sounded that alarm at a press conference on Wednesday.
WHO has been working on the Mpox outbreak in Africa and raising the alarm that this is something that should concern us all. The emergency committee met and advised me that, in its view, the situation constitutes a public health emergency of international concern.
Joining us now, Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals Analyst, is standing by. I hear you're in Bordeaux. I can only assume there's a lot of work happening there.
Oh, lots, Alix, lots. I haven't moved from this seat for the past 7 hours.
I mean, he could be telling the truth. Hey, Sam, when I heard this... I assume. When I heard the Mpox headline, I was like, I got to get Sam on. Like, give us the basics. Like, what is it? And how dangerous is it?
Yeah, so Alix, I think when the WHO Director General declares these emergencies, that's already quite a significant and important milestone for a disease. And as you know, it is already there's been an individual in Sweden apparently that's been diagnosed with it. So, and as I've said all along, infectious diseases are not about a country, they're not about a continent, they spread. That's the job of an infectious agent. So let's remember that as we talk through the rest of this conversation. What we've got here is not quite a replay of what we had 2 years ago, which was a slightly different version of this monkeypox virus, the disease called Mpox now. And the virus comes in two flavors, clade 1, clade 2, that kind of looks at its, based on its genomic structure. And this particular one is clade 1, which is normally less often found. The last one was clade 2. And this clade 1 has got a major chunk of its genome that's been taken out. And those who study these things have been writing that it has made it more transmissible through not just contact with pus, for example, but also through sexual activity, which is not what clade 1 previously had, but also just very close contact. So unlike COVID, if you remember, there were stories with COVID where you go into a restaurant and you sit diagonally across 20, 30 feet away and you still have a risk of catching it because it gets blown around by the air conditioning. I don't think we're at that level with Mpox yet, with this particular clade 1b. I can't be 100% sure, but I don't think it's like that. You still do need the close contact, and that's where that's where my knowledge kind of ends at the minute. These viruses do have a nasty habit of bringing surprises to us.
Well, Sam, that's my next question would be, how quickly can this evolve, and what does kind of that look like in terms of similarities or differences to, as you mentioned, the 2022 Mpox, or something that's more kind of well-known, obviously, in COVID?
Yeah. So 2022, we still had 95,000 people who were infected. It did become a major issue in many countries. So let's not forget that. And so far, from the last count I heard about, there's been 17,500 infections that have been documented in the regions that have reported it. How far can this go? It all depends on that mode of transmission. It all depends on, remember the days we went from a standard, if you want to call it that, coronavirus, SARS-CoV-2, to the Omicron variant, which had so many mutations that made it completely invisible to our immune systems. So everybody got another infection round. I'm pretty sure you do recall that last lockdown, I think it was.
Oh, definitely remember all that, Sam. Don't you worry.
Yeah, but I mean, it just feels like a really weird period of our lives. And so here we have something that, if the rules that it plays with are still the same as before, it does need close contact, which means you should be able to avoid an infection if you're careful enough. The other element, of course, is that we do have vaccines that do work. There is a 600 to 700 million stockpile of smallpox vaccines around, both the older generation and new generation. And there are 2 mRNA vaccines in development that could be sped up if needed. So we do know that vaccination helps, but it does have a higher mortality rate standard to even the people who get it that's not just like elderly people, which was mostly a COVID issue, than COVID did.
So it can kill more, and it can kill all different ranges, not just say the elderly, but we do have the vaccine. What about a treatment?
There was a treatment that actually is being studied by a company called SIGA, and that just failed in trials only 2 days ago. And it was being tested in the Congo, and it was being against clade 1. But the silver lining of that report is that the mortality rate that they came out with was lower than what people talk about. People talk about 3 to 6%, but in that trial, mortality was like, not small, 1.7% from what I have read. So that does give you a little flavor as to maybe it's not as bad, but it's obviously 1.6, 1.7% is still pretty awful.
And Sam, how kind of quickly can some of those vaccinations be deployed? Is that something that's already playing out right now? Is that being centered primarily where the heart of the outbreak is in Congo?
Yeah, it doesn't sound like it from the latest news reports that I've seen that Bloomberg has been doing a great job of talking about. That apparently there have been discussions, because this is not something that happened overnight. It's been going on, at least in the Congo, unfortunately, for a few months, and that there's been discussions between groups that provide the vaccines and the Congo, and they hadn't got to the last I read, to an agreement of getting those vaccinations out and getting it to people. Let's not forget, we've learned this. Anywhere you go, having vaccine is not equal to people having it in their arms. The more difficult a country, a region, reaching people in rural areas, etc., is, cold chain necessities, etc., the more difficult that is, the fewer people will actually be vaccinated. So that's 2 different things here. But I'm confident that we can have enough vaccines to ring fence at least infections and areas and travelers. But in order to go into the hundreds of millions of doses, I think we need the mRNAs to get going.
It's such a good point, Sam. That's why you're the best. Hey, before we let you go, I just want to hit you on this headline here. Pfizer and BioNTech, their flu COVID vaccine failed?
Well, talking about mRNA, here it's a complicated thing. It was a combination. mRNAs against 3 different types of flu and COVID. And it failed against one of the flu variants, which is or strains, which is the influenza B virus in that setting. So they need to go back to the drawing board and see why that is. What is complicated here, and we need to understand it better, is that they had a success in phase 2. Then they took the same thing into phase 3, and it failed against the influenza B. I've asked the company whether that's because they think that the strain changed during the trial. It's possible. Remember, flu is one of those nasty ones that changes all the time, and the change matters a lot more, I would say, than COVID does. So that's what happened here, and it does give them a disadvantage versus Moderna, which had a successful trial.
Such good perspective. Sam, you are totally the best. Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceutical, joining us from Bordeaux. I look forward to the pictures, Sam. I require some of that just to see. Because do you make your own wine there? Like, do you have a... Oh, he's gone. He already left.
Yeah, he's back to the vineyard.
Back to the vineyard. Oh, same. Thanks, Sam. Really appreciate that one.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube. But, Bailey doesn't have his bro vest, so the appeal for that is a little bit less. Bailey Lipschultz in for Paul Sweeney. So, Bailey, I'm an energy geek nerd. I've been covering energy commodities for like 17 and a half years, so welcome.
Congrats.
So naturally, every once in a while, I have an energy guest on, and this one's actually quite interesting. So it's a company called Sigma Lithium. It's ticker SGML. It trades about $9.50 a share. It's about a $1 billion company. It's a Canadian company, but it mines in Brazil lithium, obviously, hence the name. And the idea is to basically make green lithium. Can you make it cost competitively? And how do you bring your own cost down? Now, lithium is used in pretty much everything, but in particular, the batteries for electric vehicles. So if we want to make the transition to green, lithium is something that we're going to need. But how you green that is definitely the question. So joining us now is Ana Cabral. She's Sigma Lithium Co-Chair and CEO. The company just reported earnings yesterday. What stood out to me really was reduced cash costs by 22%, an increase in margins there. So we wanted to get some more insight into how all this works, how it is to go green and be sustainable mining lithium, and can you sell it for what kind of profit? Ana joins us now. Ana, thank you so much for joining us. Can you just talk us through, for those of you who aren't energy geeks, what the company does and what it's hoping to do?
No, absolutely. Well, Sigma is a 12-year-old company. We've been operating for over a year now. We're celebrating a year of shipments, consistent monthly shipments, and we ship an equivalent amount. We ship approximately 250,000 tons to 270,000 tons annually, 22,000 tons monthly, which translated into a chemical measure is the equivalent of approximately 38,000 tons of lithium carbonate equivalent. So that's what we do. This is who we are. We have two operations. They're very distinctive, but they're vertically integrated. We have a mine that mines lithium rock, and then that rock gets fed into an industrial pre-chemical plant where we process that rock into lithium materials. And at that, we are producing zero carbon lithium. And so we're the only company in the world that produces zero carbon lithium in scale.
And how, as Alix pointed out, margins look great, at least according to the results, and cash costs down 22%. How does that play out? I'm just thinking, if I'm a car manufacturer, I probably want the cheapest lithium I can get my hands on because I also want to make money.
That's the whole point. There isn't a green premium. We have been able to premiumize our product based on different attributes. The product has a chemical and a physical characteristic, which brings actual measurable cost savings of 20 to 30% to the supply chain. Either the car maker or the battery maker, whomever owns the product within the supply chain, will benefit from those cost savings. That's the basis for premiumization. And we're very, let's say, reasonable about it. We have a commercial win-win approach where we take about 10% of that, and then the client takes about 20% of that. So it's a win-win situation, but there's no green premium. Everybody wants it. Nobody wants to pay for it.
Exactly. That's 100% what I keep hearing about as well. So what enabled you to do this sustainably in this area? Like, can you replicate this anywhere in any mine and then concentration facility, or was there something specific to this?
There are a number of factors. The first factor, let's talk about scope one. When you think about the carbon load of a product, you need to think about what goes inside your operations, which is scope one, and then the kind of power, energy used to run these operations, which is what we call scope two, and then the effect that your product is going to have in a supply chain, which is scope three, right? Which is where oil and gas, for example, has a problem. So when we made this investment here, which was now 12 years ago, the objective was to reach eventually a point where we would deliver the most sustainable lithium in the world. We ended up going zero carbon, but we started with scope one, meaning we designed when we chose technologies and a processing method that were not aggressive to the environment, that were not going to leave a serious unabatable carbon footprint, such as tailing dams. We have zero tailing dams because we developed a dry stacking module. Water, the use of water in our industry is highly problematic. We use sewage water and we recycle that water. So we have what we call recirculation, reuse of sewage water. So we don't use fresh water. So it's zero fresh water, right? So these were elements. And then we chose separation methods that do not use toxic chemicals. So we have another zero, which is zero toxic chemicals. So this all happens in that industrial plant. So then you move to the mine. What is the responsible of carbon footprint inside the gate? Scope one on the mine is mainly diesel and nitrates in explosives, ANFO. So we went out to minimize that, trying to blend biodiesel, biofuels, biodiesel with diesel, and then using electronic triggers, electronic explosives to minimize the use of nitrate. So we obtained a pretty sizable reduction. The result of it, right, unabated, like result of all of that, after going through the hard to abate, after all of it, is that we ended up with inside one, meaning 0.26 tons of carbon per ton of material. So we did all that work and we got to that low level, which meant that then we could go out and offset the rest with credits because we are inside one, which meant we had to do a huge effort to be inside one. Comparing to our peers, in the salars in South America, is typically 5 tons of carbon per ton, and we were at 0.26. In other mines in other parts of the world, is 15 tons of carbon. Mm-hmm. In certain high-cost mines in Asia, it's 45 tons. So it was an enormous amount of work on scope one.
So
I'll go to scope two, though.
Yeah, no, go ahead. We only have about 30, 40 seconds left, but I do want to know if you can replicate this elsewhere.
Well, that's the point. I mean, scope two, we were blessed with the grid in Brazil, which meant that, we have access to abundant, available, renewable energy. So that also contributes a lot because our scope two is green. It's 100% renewable. So we ended up with a situation that's hybrid. Could we replicate? Yes, we can replicate scope one, but then we will need to plug it into a renewable source. So that's kind of the uniqueness of what we do, is a combination of technology with a highly benign grid.
Mm-hmm. Well, Anna, we really appreciate it. It's a really interesting story because so often we hear about how this just isn't possible, and it's nice to get that success story as well. Look forward to seeing your growth as well. Anna Cabral, Sigma Lithium Co-Chair and CEO, joining us on sustainable lithium. You good then, Bailey? You got it?
I learned a lot. I learned a lot. I will say, though, I'm a big markets watcher, as you know. Sigma Lithium, about a year ago, north of $30 right now, trading around $9.
I mean, it's lithium prices.
Yeah.
They've just been, that's the thing. It's super cyclical. Yeah. And look at what's happening with auto demand at the end of the day.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We have a really interesting guest coming up now. So Appian is an American cloud computing and enterprise software company. It's headquartered in McLean, Virginia. It's been around for quite a long time. And the CEO and founder, Matt Calkins of Appian, joins us now. Hey, Matt, just dumb question. What does your company do?
Hey, Alix, we do processes. Processes make the world go round. Every organization is composed of its unique processes, and we automate those processes. We orchestrate them, and we make them better over time using our expertise in most of all our software.
And how do you guys fit into kind of this AI wave? When I look at, a number of stocks that have continued to rip and move higher, it doesn't seem like Appian has been caught up in that shift.
Well, we're not the highest profile member of the AI wave, but we're really pertinent to it. You see, every process is made up of work getting done, and some of that work is done by AI. So we've been selling AI for nearly a decade, and we have a unique angle on it. Our angle is that AI should work with private data, right? You shouldn't, as a user, you should not have to divulge your data at all to an AI algorithm that you don't own. You should preserve the sanctity of your information and still be able to get great Gen AI results. So we work with kind of a virtual database to allow that instead of asking our customers give us their data.
So that would totally fly in like a large language models that we're dealing with now, where they sort of store us all this public data or pay Reddit to get their data. That would be very different.
Well, okay, yeah, I'm not talking about how you build the generic AI model. That's what you're talking about. It's how do you first train a generic model. I'm talking about how organizations like corporations are frequently asked to train an AI model after it's already incorporated all that public data, but train an AI model, which has certain downsides. It means that you've made an investment in a model you don't own. It means you've divulged your data, and that could be risky. It means you can only get one form of answer back from that algorithm, because no matter what security clearance the questioner has, you've all got the same base of data to ask against. It means it's hard to retrain that model. There's a lot of disadvantages to training an AI model, and we do find a way to get great Gen AI results without that training step.
Interesting.
Do you guys have any marquee partnerships? It just feels like, in terms of kind of this AI boom, you mentioned that you guys have been operating in the space for quite some time, has drawn a lot of money from Microsoft, Google, you name it.
For sure. We work with all of them, but we're AWS centric. So that's our primary partnership, and it has been for a couple of decades now. We're also one of their early pioneers with the cloud.
What do you think AI regulation should be, and where is it now?
It's nowhere near where it should be. That's the answer.
I'm like, do we have AI regulation at all?
Yeah, we should have some. We should have some to establish a fair and well understood set of ground rules so that we can all compete without uncertainty. That would be ideal. But today, AI regulation is mostly about fear. It's mostly about stopping AI from doing something catastrophic, to quote the recent California proposal, catastrophic, instead of worrying about like bread and butter concerns like, is AI infringing on people's intellectual property as you make the next model? I think we're much too driven by fear and too little driven by just creating a fair playing field for all the participants in this emerging industry, which is really what we need. Less uncertainty, less divergent regulation depending on where you're doing business. It's this in Colorado, it's that in Europe, et cetera. It would be better to just come up with a standard, and that standard should address the first harms that AI is committing, which are harms of breach of intellectual property, rather than the eventual hypothetical harms that most legislation seems targeted to address.
And how would that actually, in your view, come to fruition? It just feels like the kind of climate in DC maybe wouldn't be as conducive to actually implementing some of these practices at this point in time.
Look, I live near DC, and it's paralyzed right now. We're all thinking about the election. But I do have a proposal. I think that we should begin with a few broad statements, like a Bill of Rights almost, around AI. I think AI should disclose its data sources. That would raise everybody's visibility into what's going on in AI and allow us to better figure out where the value is truly coming from. It's coming from the data more than we realize. And then for private data, privately identifiable information, and copyrighted information, all of that should be used with permission and compensation. So if we started with just that, full disclosure and permission and compensation for all private information, I think we would have a fair baseline for how you're allowed to build an AI algorithm. You'd have good transparency. We'd be better understanding what this technology really means. And then also, we'd actually be helping the industry become more valuable, because we'd shift it out of the current race for information into something far more important, the race for trust.
Matt, that is your day job. That is the job that you've had for a long time, but you also have a side gig, and apparently you're super big into board gaming, as am I. I feel you on that. But you also make up your own board games. Is this true? Because I am so jealous.
I do. I love it. I've been designing board games for a couple of decades now, and I've got several in print, and it's a great pleasure to see other people playing them. It's one of my favorite things.
Wait, do you have like a favorite? Like, is there one game either that you play that's not yours, and then the game that you created.
Okay. It's hard for me to pick favorites amongst my own, but I guess I'd have to point to Sekigahara, which is still rated one of the top war games ever written, even though it was written more than a decade ago. That was a real pleasure to write. And my latest is called Charioteer, about racing chariots by making simple card combinations. My favorites to play that I did not write would have to include Power Grid, Acquire, and Automobile.
Oh, I don't know Power Grid. I need to get that.
Good one.
I'll be the
like
dumbest
this.
person in this conversation. Are these thinking games? Do I have to be like ready to
Do
lock
you have to
in?
think?
Yeah, you'll do better if you think, for sure. In fact, that's the fun of it. It gives you something to think about, a competition to engage your mind.
Okay.
Bailey asks that question every day when we ask him to anchor. Do I have to think?
Well,
I mean that's a TBD, to be honest.
I'm a Yahtzee fan. I like, you roll the die, you pick out the die. It's pretty straightforward.
No, there's strategy
Even in
involved.
Yahtzee, there's some decisions. And if there weren't, it wouldn't be fun.
Yeah, I'm totally
You
totally
set
with you.
yourself up for that, by the way.
Okay, I'm going to check those out. That was really great. We really appreciate it. Matt Calkins, thank you so much. Founder and CEO of Appian, joining us. NASDAQ ticker is APPN. Wait, so you guys don't have parties in Jersey with board games?
Okay, so I love board games. So I didn't want to downplay it.
Okay.
But I like Yahtzee. Were you part
That's
of
not a board
the
game,
code
but
names?
okay.
Well, I guess maybe not board games. Is code names? It's a card game.
It's a card. Yeah, I don't know. That's a good question. Okay, code names. So you like the code names?
Code names.
Yahtzee.
Have you played Chameleon?
No.
Chameleon's a lot of fun.
Okay.
It's good. I know you're not I don't know if you go to breweries. It's a good brewery game.
It's a good brewery game.
Yeah,
okay.
it's fun
I mean, my daughter's not quite old enough for that, but it's a fair point. I'm a Catan person, so that's me.
See, I haven't put in the effort to learn how to play, and
But
everyone says once you
do-
play, yeah.
Oh man, yeah. Okay, the first time is a slog, and it's confusing, and then it might break up your marriage. But once you get past that point, it's so good. We're also playing Pandemic Legacy. That's interesting. Anyway, we digress. Bailey's looking at me like he doesn't know what I'm talking about.
I don't know what you're talking about, but JT's gonna come over. We'll play some Catan and build some roofs.
Oh, I see what he's doing, and he's like, come over and then fix my leak or whatever.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.